Boom, 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 boom. Alrighty. Good morning. I don't know. I had to make a title. And I thought, what does Fed rhyme with? Dead. And then I thought, Red Dead. Good morning. Good morning, Sandy. Truck. Swisha. Relative decibel. Relative decibel. Good morning, J&B. Finally got that pullback on MPW. Very excited about that. Really, really wanted to see that, so glad we're getting it. Good morning. I genuinely thought this whole week would be much more red than it's been. So I'm pretty curious to see what this announcement does today. GME has stayed largely very flat, so it's kind of interesting. So is AMC, although they both kind of came down a little bit. What do we want to start with this morning? Let's see. All right, let me start with this WTO business, because actually there's not that many trades right now that are moving really far, except a couple that we watch. And it's sort of funny because it's funny in like a wah 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 kind of way. Like I had an alert here set for 111 on AILE, and this was one that someone had asked me about, and I talked about the probable run up to 171, that it would probably stop there, and it went from like 125 up to about that place at 172 or so on. I think it went about a bit higher, maybe up to 185 or something, but it was basically right on that level where it distributed, and then came back down. In my head, my analysis was not incomplete. It's actually on this chart over here, and if I switched over, what you'd see is that it has a basically I had it coming back down and then coming back up and chopping here potentially. So given that it took a lot longer to come back down, you could just scoot this over. But my thought was it probably wouldn't come back much above this area. Like this would be your range top at 155 and 172. So what I did is I set an alert, and I set an alert at 111, and it never hit 111. It actually came down to like 113, and then hit 112, and then it hit 113, and then it hit 114, and then it just took off. So I completely missed the trade because I had a 35% trade, which I knew it was going to do it. I don't know, like it just, the way it was setting up, it was too simple almost. It's like you got the range whip around here. They basically defined a range for you, including like a, auto reaction top. So there's just like all kinds of stuff that, oh my gosh, like I'm looking at just thinking like, oh, it's going to come right here and do this. I didn't trade any of it. It was just one of those things. Like I just tend to do that. I don't know why. It's like I set up the move, and if I'm slightly off, I miss it because I'm relying on alerts to get me there. So always a good idea maybe to set your alert a bit higher than you expect or a bit lower than you expect. If you expected it to come down and hit a bottom at 111, maybe make it 114. If you expected it to hit a high at 173, maybe put 170 or something. I think that this fly. This is not even a challenge. I think that the missed opportunity just kind of hit me in the face. I was like, well, there's that. So I've been looking at WTO because I think this is a really similar chart setup. And I don't want to say it's exactly the same, but it's very, very similar. Now, there are some key differences that might make it a bit more long-winded. Some of the things I've kind of noted already are the maybe like the lack of that drop-in value makes it challenging because it's really hard to know. With this one on AILE, you have a really clear drop-in value and reaction. So there's a drop-in, and then when it hits that low after the iteration's done, and you've got we call it like a high heel or stiletto or something, you got a nice breakout to the upside. That's where you see that reaction going, but then like WTO doesn't really have that. When I went back and looked at it more carefully, the best that I could come up with was actually the $6 target, because the $6 target, it's like 6 or like just slightly above there, because it's like a historically important target. Like it's a really long term, the $6 is a really long term value level. There is an issue though, which is of course, a split. And technically, does a split change that? Does it change that? No, because the chart should move with it. But like, you don't really ever know. In some ways, that it does matter, because there's oftentimes there's a drastic change in like on balance volume or things like that. When you have a split, sometimes that desire is to bring the price down in order to bring in more buyers, bring in more volume. And then sometimes, we look at these things and it's like, well, sometimes they're doing stuff like crazy just to help avoid bankruptcy or whatever. So when I looked at this at first, I was like, I'm not really sure if this is super, super significant, but the overall picture that I get here is one of pretty much the exact same thing. So like you've got this initial kind of walk in, and then you've got this sort of shallow S-curve at the end, which is, it's really just a way of saying like it kind of hits and then it just slumps down. It doesn't necessarily mean that it's not a perfect S-curve. Sometimes I say shallow and it's really pretty accurate. I mean, this is pretty much a 1-to-1 S-curve from the top, as you can see. So it's not like the term shallow just kind of represents maybe the verticality of what I'm thinking, and how I'm imagining that moving. But it does sometimes actually is shallow. Like you don't get a 50-50. So it's important to note that. So why am I talking about WTO? Well, I think, and I'm not 100% positive, but I think it's a really good opportunity, because even though this is basically a penny stock, you're looking at some really substantial trading amounts here. Like even just trading up to the top of this channel is quite significant. So a single pump here could get you like 60 to 70 to 80%. And I mean, it's a pretty big return. I wouldn't normally like advocate trading penny stocks, because the risk is very real. Penny stock may have an aim in mind to drive the price, like an operator, bull or bear operator might have an aim in mind to drive the price down. And in this case, we don't really know every little detail. I could probably have to go back and look what happened here in August. Jason says they did an offering, but it was direct to someone for 65 cents for a big piece of the company. Cause a catalyst in its place. We'll see. my big thing is like the TA matters, and so I'm gonna kind of focus on that. And what I think is pretty straightforward. Like I think it's basically the same setup. I'm not saying it's like 1-to-1, but it's really darn close. And it's also really similar to what we've seen on AMC before. The big danger is not knowing where the real floor is. Like, and the same thing applied when we were going down on AMC. It was like there were ways of like calculating where it might be in like the mid to high threes or something like that. But ultimately, like you had these estimations in mind. But like I said, mid to high threes. I also said 250 at one point. It ended up being kind of both. But I could have been wrong. I just had same thing I have here. It's kind of like you have trend supports. You've got the trajectory setups. You've got the sine wave and creek setups, and those are things that typically can help you identify where that target is. So I think that when talking about this trade, if you understand the danger of it, which is frankly like any penny stock that's below $1, is at risk of going the MULN route, Mullen route. You guys are like, what's Mullen? Mullen Automotive, they kept having to do like reverse splits, I guess. I'm trying to think about the word. Yeah, and like we continuously kept dropping underneath $1, so they had to keep, altering manufacturing, the value essentially by changing the amount of shares, so they wouldn't get delisted, and it just continually destroys the value over and over and over again. So the issue with that is, of course, the danger of any kind of a penny stock environment that you're in. You're always at risk that something like that negative could take hold, or that's the aim. So just keep that in mind. Like, this is not a risk off play. This is definitely a risk on. I don't want to make it sound like, oh, it's a guaranteed win. No, 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 no. It's not. However, do I think this is a really good setup? Yes. Do I think this is an easy enough to read setup? Yeah, I do. And I think if you can get that build out, if you get the breakout rather above 75 and then $1, that's the two key levels, 75 cents and $1. You're probably going to move all the way to 250, which is, again, pretty darn incredible. I mean, if you think about where you are now, it may seem a little ridiculous because you're like, that's 350%. That is a very high move. But remember when AMC broke out and ran 400%, it was a really similar setup. And it broke out and it ran up after making what we would call like a base, perhaps. And I guess in that example, it may not be the best example, but in that example, it would be like basing above 80 cents, and then it took off. So I really think that it's a stone's throw away. It just needs a good push up and breakout here. And I do expect it'll advance. And it's a lot like AILE. So if you want to do a comparison between the two, I think it's a good comparison. I think you could do it. And you come up with a pretty similar, it's very similar in some ways, targets and everything. And I feel like the target on the S curve is probably the easier one. The target on the high is a little more like, okay, certain things have to happen in order to break out. If you don't break out, you head back down. And it's a larger structure. But for me anyways, that S-curve does seem to be today. So I'm not really sure exactly if FOMC is going to be the catalyst or what. But if it's not today, it's got to be like, I mean, I don't even know. I guess it could be tomorrow, but it's just like right there, I think it is today. So it should be heading back up towards 90 cents, which sounds kind of crazy because it's like dropping right now and you're like, well, it doesn't look that good to me, Booksy. No, but neither did AILE, like this thing was slumping down, and it probably didn't look great, but there was an RSI divergence, and this is a 3-minute, I don't know why I'm on a 3-minute chart. That divergence goes up pretty far. Let's go to like 15, though, because I don't want to keep it on a 3-minute chart. And that divergence is there throughout this bottom. So during this whole slump down, you have this kind of long-winded divergence. And we're seeing the exact same thing. to a degree. It's not identical, but to a degree. You're seeing the same thing here. And you might say, well, yeah, a little bit. No, I mean, it's there. If you go to like 15, you can see that there was a lower low right here, right after that split. So that's the only other place that you would say, no, the divergence reset. But even still, from like 75 cents down, it's still strong divergence. Like this is going up, like accelerating speed, right? And then what's interesting about these two cases, in just examining how that RSI eventually broke out, notice that that upthrust happens right here, right before it leaves the higher support region at like 145. And we have something kind of similar right here. There's a kind of a last minute push up, and you can see the RSI like kind of peaking off. And then it's a similar action right here at like September 5th. You've got another support built out. I've got this one higher, but really it's like there. You got another support built out, and this is a very similar, because it's the last hit on the edge of the channel, and then it drives back low, and is also doing that with RSIs, driving it back down through what would presumably be like a, I don't know. So it's kind of like the peak of the wave. It's the peak of this, like the steep part of the wave. You see something really similar in both of these with the drive down. And then the recovery, which again is like, yeah, there it is. Clearly it was divergent for a long time in this lower area, and we're seeing the exact same thing right here. So it may not look like the strongest trade because you're like, well, it looks like it's falling knife, right? But it's very clearly like a similar setup to me. So when I look at this, I'm like, yeah, it does seem really high. I don't I don't disagree. It seems like a lot, but I definitely could see how this thing could be pushing up towards 250, which is really, really far. So to me, like, I don't know if I'd trade it much beyond that. I think a lot like AILE, probably going to top off up here and then have to find a floor above $1. And I think that's probably the way it's set up. $1 seems to be about the middle of this S curve here, of this like bounce. So I think that you're likely, just like here, this is kind of the middle, right at 112. Weirdly, it's like the same number. It's like 112 right there. It really is. It's like identical. So another thing to note is that like when you go back and you look at top to bottom here, you can see that the middle itself is that 111, 112 area. It's right where that drop happened. So if you do the same thing locally in this area, depending on how you do it, you can see that the bottom, presumably, it looks almost identical. I don't know exactly why, but you could look at either 112 or you look right here at that floor, 137. The bottom should be like roughly 52 cents. So like it's basically there and it's divergent. And worst case scenario that I can find for this is like something like 30 cents or something, which is pretty low. It's not impossible, but it would be like another big drop. So given the S curve curling up, unless this happens and it drops back down, it's almost, for me, it's like not guaranteed, but it's like a really simple trade. You're just waiting for that breakout. I tried to do it this morning. Looks like it failed. So we'll see what happens. But that RSI is now camping out on the top, which could be very, very positive. So we'll see. So it needs to have the break. And I would say it's going to be, for lack of a better word, it's kind of doing like an iteration right now. I'll get rid of this bottom. You see that upthrust here and then the drive back down. It's trying to do something similar because this goes back up to check that level, and that's what this is doing. So in both cases, they're kind of going back, checking like a previous support and then dumping it, trying to dump it. So it's going to need to make that advancement. And then also there's a pretty strong creek right here. It's a resistance that's been causing some issues. Slowly been pushing up, but not really much. So I would say at this particular point, it needs to pass above about 60 cents. So I'm going to put an alert on 60 cents. But honestly, I think from there it goes up to, and we'll see. It might be a little slower than this one, but it should see a pump up to about 90, and then we'll see if it can hold. It'd have to hold like above the creek jump and then go back up. And if it doesn't, then I've just got like a longer winded curve right here. So yeah, so this is probably one of the most important days that we're going to have in this entire saga. Ever since the run up in May, this is probably the next most important date. I'm genuinely surprised that, people are kind of like sleeping on it right this second, because the nature of the move that we've been waiting for is one that I guess where we're looking for like that catalyst. And this is it. I mean, the rate cut, to be fair, I need to be as fair as I possibly can. The rate cut is not necessarily not baked in, if that makes sense. So we had talked about this as a possibility, and it looks like it's pretty close to what might be happening for IWM, and that it could potentially top off here and then actually sell off, because in some ways a rate cut in this environment, the market is always supposed to be pricing in the future. It's not supposed to be the present, it's not supposed to be the past, it's supposed to be the future. So it's supposed to be, in most cases, forward looking. And so you would expect that 25 to 50 point cut would have been priced in to the move. So you're like, well, then what's the catalyst about? Well, priced in has a big concept, because pricing in, on one hand, you might just think means dollar value. Okay, well, if the dollar value is priced in, does that mean that IWM is valued at 219, and that's it? And then what's going to happen? Nothing, Well, I think what that means is that they can play on expectations, because they're already in a position where they're ready to do whatever they're going to do. So they being like most of your institutional traders who have trillion-dollar companies. So they can play on your expectations about it being a positive catalyst and maybe have like a sell-off, for example. Or use it as an opportunity to shake people out, right? And so those are things that are definitely worth considering today. And I've been largely kind of on the fence about it, but I have sort of been favoring this idea that maybe we're going to see a drop. And I have ideas about what it would look like to see an advancement, but I haven't really felt strongly that that's what's going to happen. So one of the things that caught my eye the other day on IWM was that it pushed up. Y'all are like, well, what do you mean the other day? Like yesterday, I didn't stream yesterday at all. I just had other things to do, and I went to look at the chart, and I was like, there's not really anything worth looking at, 'cause it's kind of all the exact same. Like basically nothing changed from these predictions of coming down to at least 485. We did get a bounce, and it was like a false bounce in the morning, and then that was it. The rest of the day was just flat and slumping. It does look like it's trying, as a liquidity test goes, it's trying to test up and down right below 485. So there's a push up to 488, push down to 480. Pretty clean little whip around here to see where we can go. So I think they checked for low liquidity and then brought it back up to see if we could get more sellers involved. And then we'll see if they try to drop it through. And if they do, again, it's kind of like, well, what's the catalyst good for if it's not going to just take us off, And you got to remember that, like, when we've had positive catalysts on SPY, I remember back in like 2022, 2023, maybe not so much in 2022, but definitely in 2023, we'd had positive FOMC catalysts talking about inflation, and that was what was on everybody's mind back then. Seemed like that was the big stressor in 2023, and almost all of those concerns became essentially moot by the end of the year. You're kind of like, okay, well, inflation went ridiculously down in terms of how much it grew, so people's concerns about recession were there all year, and it was like any little bitty bad news or any bitty smudge in the data on CPI would send the market into a tizzy, And so we'd get to these FOMC meetings and you'd have an expectation, and then a lot of times the expectation was, well, is it going to be, if it's this, then it's going to be positive. The inflation comes back like cooler or whatever. And everybody's just kind of hanging on the words of Jerome Powell, as a speaker for the Fed. And the narrative has changed a lot. People are less concerned about inflation because inflation's coming down. Disinflation has happened in large sectors in the market. And you can talk about cooking the books all you want, but you can only do that to such an extent. Like, even if you cook the books, if then the books that are cooked still show inflation coming down, like that same data set shows inflation coming down, it's still the trend. So I don't feel like there's a strong enough argument at this point for recession, except for what? Oh, the labor market. So recently we started seeing that CPI, and it came out last week, and you may not have even noticed, because recently it's been like less and less of a concern for people. So like the idea of CPI and PPI coming back slightly hotter than normal or slightly cooler than normal hasn't really made as big of an impact as it did a year ago. A year ago it was like every little piece of news, and it's so, what we saw on SPY was that like we would get good news and then the market would dump. And it's because they were already like pricing in the news of the trend, and they would use any little bits and pieces of bad news to kind of spread discontent and fear and worry. And guys, you say whatever you want to say about, again, the market on the whole and whether you think it's going to blow up or dump. We spent a year and a half climbing a worry wall, and that's what we've based it. We've had a bullish run, like something we haven't seen in a long time, while all this fear has been going on, and I heard it nonstop, and you heard it nonstop. You say whatever you want to say about the true nature of the market, and we can argue about it or talk about it and just discuss those things. I welcome the different opinions on it. I do, because I think it helps us to learn. But it is what it is. Like, go back and look at the chart. I mean, all of those fears of recession and inflation and inflation leading to this or that, it just didn't happen. So now we're at probably the most significant time that we've been at. And it's interesting because I almost feel like it's not even a big deal, which is weird, because a year ago, everybody was talking about rate cuts and how significant they were going to be. And now I'm looking at it and I'm like, are they though? For the S&P, I think it would be a difficult argument to say that they really matter that much. I think for small caps, the argument has been that it does matter, but we've already had the breakout. So it's broken out and it's turned into like this kind of SOS region well ahead of rate cuts. So the question is it priced in? I mean, and I got to be straight with you. Like, I don't think it stops here. I think we go to 250. I do. I don't think we stay at 220. I think IWM goes to 250. That's been my idea for a long time. I had this on my chart for, I don't know, the whole year basically. This S curve that goes up to about 250, and it hasn't failed. Like, it's not broken yet. And so I see this 250 as not necessarily inevitable, but as something that's very much still at play. We still have trajectories pointing up that direction. I mean, amazingly, it's still kind of driving that same direction. You can see it right here. Go back and look at the recent three moves up, and you see the same trajectory to that end of the S curve. I'm drawing it on the chart right now. It's definitely there. So for me, it's like, it's not really a question of, is this still a viable technical analysis? Like, it's not changed. Nothing's changed. I've had, again, like roughly 251, 252 on my chart, again, most of the year. And I think going back to where we were at the beginning of the year and looking at where that breakout was, even the smaller S curve proved to be right. So the question is, like, are small caps already pricing it in? And if they are, and I think you could argue that they have, then this rate cut may or may not matter like the way you think it would. So during some of that positive news on SPY in 2023, when we were still hanging on all that, oftentimes we would dump. And one of the things I noticed was the options chain would be loaded with like puts, for a certain price, and we would hit those prices and then reverse. So there was clearly like a desire to drive the price low and get out of your positions, out of your put positions, get out of your short positions after driving the price down in order to get the markup. So sometimes that initial move doesn't really represent what the market's actually going to do. And we saw the same thing here at the FOMC back on June 12th. There was like positive CPI data, it rocketed it up, and then we just sold way back down. Like, oh, we didn't actually go as low as we wanted to go. I remember back here this week there was a max pain at like 207 that week. It did not hit 207. As you can see, it definitely went up there for like a brief second on Wednesday, and then it came back down, and ultimately max pain ended up being like 203. But it closed low. It closed down here near 190s, and there was a huge amount of open interest at like the 190 strike at the beginning of the week. So sometimes, again, it's like it's not really so much the news that's driving anything if it's already kind of being built into the chart. So when you say priced in, it's important to note that like priced in means not necessarily the dollar value, but like the structure. So right now I'm looking at this structure and I'm thinking to myself, if this is priced in, there's definitely a possibility, and I've mentioned this before, that we still need that 209 support. And that area right now does coincide with that current uptrend and kind of a wedge action here. So there's certainly a possibility that 209 is part of the pricing in. And you're like, well, we're at 219. You think we're going to drop $10? I'm not saying I'm positive about it. I'm just saying it would not at all surprise me if part of that pricing in is just the nature of where we are when that news hits. It'd be easy for me to come on here and say it's going to soar. Well, most people are already kind of assuming that the small caps will just soar. And if they're in a position where they look like they could, and they're, again, pricing in meaning the structure is right, then sure. I've got two options here on this top. I'm specifically focusing on IWM this morning because I want to get the big picture across here. This is the small caps, which is pretty much everything we watch on this channel. And I think that this is the one that is going to have the greatest impact, that rate cuts will have the greatest impact on. So couple things. So number one is it looks like there's kind of a double up thrust here. Definitely looks like it turned down. Weirdly, the RSI prediction I made looks really, really accurate, even though the price prediction that I made looks like it did not quite hit right. It looks like it went quite high because I didn't think it was going to break out here. I thought it might push resistance and then come back, and I guess it did. If it crosses up here, which is a possibility, then it could be, again, that situation where it just flies. But it would have to cross up. So it would have to basically break out today to the upside and then hold the remainder of the week up here. And it would be even better to actually have, at this point, like an SOS to like break up, check this creek, and then have an SOS up high and hold that support through the end of the week. I think that outside of that, there's not really much here that makes me think it should go up. Sorry, I had to spray my cat. So when I look at this, I'm feeling like right now, like, all right, it pretty much did what was expected on my part. I felt like, yeah, this is what's likely going to happen, and then it's going to head down. Fill this gap, 212, maybe 209. There is another gap really low at like 201. And then I also did some maths, and there's a possibility this thing can come down to like 195, which does seem kind of crazy, but it's essentially, it's analysis based on this is a bottom on August 5th. If this is a bottom from August 5th, it is possible that this could push up into like a phase B top and then come all the way back down and form a new bottom down here, which seems, again, kind of crazy, but definitely is a possibility, and the math measures out pretty accurately. So it gives you like a really clean 50-50 swing back up over the top, which is typically what we see on a spring action. So with that in mind, I had this idea that like, well, if that happens on IWM, it's probably going to be pretty much market wide, at least for the small caps. Why not, and I think there's definitely a possibility. So we go back to looking at AMC and GME. AMC's low pocket is down here between 430 and 440. I don't really want to go there, okay? If I'm being completely honest, I'd be a lot more comfortable with a really shallow spring, if we need one, back at 461. Now, some of you are going to say, again, like it happens every time, well, so-and-so said that the bottom was already in, and I think they're right. Well, you might be right, okay? But what I do know is that the way this set up was very similar to the normal cat ear top that we get. Very, very similar. And I did this diagram just to kind of demonstrate that a little while back. This is a sine wave structure, and it's pretty much the same structure we were looking at WTO this morning. I mean, we're just talking about an early part of it before that bigger reaction. This is very typical when you're trying to drive the price back down and see if you're going to, form a new low. It doesn't have to, and sometimes it does end up being kind of like what we would call an LPS, where it never comes back below maybe that first drop that's made after the auto reaction, where it's really strong and it just floats. That's possible. However, it would be really silly for us to not think about a spring in terms of driving the price up in order to sell off. And what better place to try to do that than right underneath 5, treat 5 as the floor again, and try to sell down from 5. Now, have they been largely successful at that? No. Like last time we tried to drive back down through 5 was back here on August 28th. And this is right where we said the iteration looked kind of crappy. Like it wasn't going to go far below 490. Or excuse me, that was back. Or was that? Hang on. Picked the wrong one. That was back here, right? So they drive the price up in order to sell back down. And we see something kind of similar here, but much larger. It definitely looks like a widening at this point, which isn't meant to instill fear, like, oh no, it's going to come all the way back down to this creek again. I don't think so. It made a higher push off this. It didn't actually hit the creek this time. So it's been pushing away from it slowly, like curling upward. But sure, like, is it possible that this drove up in order to drive back down? Yeah, and I said as much back here, and I've said it a few times since September 4th, so I hope I'm not annoying you with this, but I just didn't feel comfortable calling that the bottom because it doesn't always work that way. Like it very rarely hits a spring without making the floor first. So the argument would have to be that the floor was like 472, but we never really checked it until after this push out. So it's kind of confusing. It's almost like if that were it at 472 back here, that dip on September 11th, then the expectation should have been that this would have crossed up, and that didn't happen. So instead we got, again, another 4 top. We did not cross the creek, and I mentioned that was kind of the big thing. I said, Thursday, Friday last week, it's got to cross up or it's probably going to come back down. It's not a question of, it's not even like really an if, it's an if-then question, but it's not really much of speculation. There's not much speculation to it. And then it may look like this is completely off kilter here, this little yellow up thrust with this drive back down, but it is kind of what's happened. If you look at the actual move here, it drove the price up, and you just got like a secondary I don't want to drag this all the way back down, but you get like a secondary distribution. So they basically have two up thrusts right here that pushed up and pushed up again. And the conclusion for that is you're trying to, again, continually trying to get sellers to drive the price down as far as you can. So if FOMC acts as kind of a catalyst to entice sellers to drive the price down, I don't think it's impossible that AMC and GME follow suit, and this is where you finally get some traction maybe on the sell side. Now, of note here, we're looking at 1 hour on IWM. It's pretty much overbought still. We're looking at 1 hour on AMC. It looks like it's approaching oversold. So they're definitely not the same in terms of that comparison. I haven't even looked at, I should check 4 hour. Yeah, 4 hours not really overbought yet on IWM. It could have a rally potentially, but it's also in the middle. So for it to come back down to like the 50 would probably make sense here, to come back down to like the middle and then take off. So that might be like that 209 hit. For AMC, when we look at a higher time frame, and we need to, sitting at 44. So that's pretty good. You guys are like, what? That's all you're going to say? Well, look, when we took off back in May, we were sitting at like 41. So by comparison, it's a pretty similar level. In terms of like, do you have enough room to move really far on this? Yeah, there's plenty of space. I mean, if you see the way AMC is broken out before, sure. Yeah, there's plenty of room there. So I don't feel like it's a bad spot at all, but it is kind of in the middle. So it doesn't really give us a lot of answer, It doesn't look particularly bullish right now. It's trending below the moving average on 4 hour RSI here. But again, that makes sense. I think if you saw that breakout to the upside, catches on 50, it'd probably be breaking above 5 here. You know what I mean? And that's where you need to go first. So GME, I'd speculated we may go up, then come back down, but down has still been like largely like the main picture here. And again, just kind of like IWM, it stayed higher than expected. So I thought IWM wouldn't go quite as high as it did. Not like way off, just like didn't quite get it right. I didn't think it would go up to 221. I thought it'd go up to like 219. Okay. And then AMC and GME kind of both floated a little bit more than expected this week. Not incredibly off, just not quite right. So we didn't get any kind of major drop down. And I only stress this because according to what I think is like the iterative move, this could come as low as like 18s and maybe even high 17s. Ideally can't stay above, doesn't drop below 1770, but really it's all fair game. So if this were to drop back down again, wouldn't surprise me. So I was looking at ways in which you could accomplish that. We did not push higher, so this didn't happen, which means it didn't cross the creek. So it actually has still yet to even touch it, is what it looks like to me. It may have gotten close right here this morning, but has not yet touched it, has not yet advanced. So there is a real danger in like an upthrust downward motion. I mean, if you think about this as a big wave, it's easy to see how this could be a push-up that then still has like a massive pullback. And just terms of waves and how they move, the logic is certainly there to have like a massive push-up and then redistribute. So I don't want to put that out of the realm of possibility either. So in order for GME to really break out, I think back above 2160 is going to be really critical. It's this level right here. And 2160 is the support that we broke out when we hit the bottom way back in early August. Again, there's that August 5th target. And so there's the evidence that like, hey, if IWM slid all the way down to here, that's the August 5th target, you know. And if AMC slid all the way down to here, that's the August 5th target. Notice that they're all the same. Yeah, that's kind of weird, right? Well, they are. They all have that similar like August 5th drop, and it represents kind of a commonality between them all, like of where you may need to go if it does drop. Even though it's a significantly low move, it's basically a retest on the previous floor. Again, spring versus LPS, right? Like in an LPS, you don't come back down and push through the floor. In the spring, you do. And you guys are, well, how many floors and how many springs? And as many as you need. You know, every single one of these has been a floor that's been checked. I'm hesitant to say this one holds because it really didn't hold. When GME dropped, it went down to 1933 basically, and the 1990 mark is where that previous bottom was. It dropped immediately below that gap. So it's hard to say that it has strength there, you know, when it clearly already pushed below it and checked low. So it wouldn't be out of the realm of possibility that this bounces and comes back down. I think it's just a simple matter of, you know, we're not 100% sure, but you shouldn't write it off. I think that's just part of the nature of it. So, yeah, you're asking how are the rate cuts going to affect the stocks? Here's what I think, and I think that this is pretty straightforward, okay? I think whatever happens now through next Monday probably doesn't, I would say it doesn't necessarily represent what's going to happen long term. Because now until next Monday, you've got all the options expiring at the end of the week. My opinion is that there's going to be a lot of reshuffling. And largely, I think most of that's been priced in. So the expectations may not be met that rate cuts will send stocks going up. So here's the big thing. In the past, people have cited multiple times, and I don't know why, but they've cited that rate cuts have dumped the market or caused like a massive market correction. I did research on it. I think 14 out of the last 16 times it has not done that. So I don't know where that came from except for two places. One was 2001 and the other was, which had rate cuts, and then 2008. Both of those are like really weird, like off years. They all both have bizarre catalysts. As you already know, you had the terror attacks in 2001, and there was more stuff going on in addition to that. And then you also had in 2008 the big like mortgage crisis, housing crisis collapse. And so to attribute it and say that the rate cuts are what the cause was is pretty silly. Historically, what rate cuts have done is they have increased liquidity, and liquidity moves the markets. So when you don't have to pay as much on interest, more money flows, period. It's that simple. So if you have a lot of loans and you don't have to pay as much on those loans, there's a lot more money flowing through the market. It's really that simple. And it may not seem like a lot, but you have to imagine, like, at least I know for like mortgages, for example, like interest rates went from like 3% to like, I don't even know, 8 or 9%, something like that. And they're back down to like 7 or something. But that adds up. And you think about how the whole market, all of these different small caps, thousands, there's 2,000 in the Russell, right? 2,000 companies in the Russell 2000. If they have a lot of debt and you're reducing interest rates, you know, that rate cut affects those things. You would have that kind of, not even a trickle down, it would be like a multiplication of liquidity. So the idea that rate cuts somehow send the markets into like a giant tumble is, I don't know where that came from. I really don't. Except for those two major events that, because historically, like every year, except for those 2 years, every single year after the year following rate cuts when they begin is always a bullish year. That's not an insignificant amount. It's like over 80% of the time that the next year is bullish. So liquidity really is what moves the markets. When liquidity is tied up or has issues, that's where you see a lot of the major market pullbacks. So at this point in time, I have no reason to think that IWM, which is the small caps, would have some kind of major market tank as a result of rate cuts. It hasn't even reached its all-time highs yet. It's not far away from it. It's just not there yet. It's spent way longer going sideways than the SPY, for example. So when I look at something like IWM, I'm like, it's really hard for me to see any kind of a bearish argument as super legitimate, as on the basis of rate cuts. That doesn't make any sense. There'd have to be some kind of other negative catalyst, like a world war breaks out or something. You know what I mean? Like, it'd have to be something pretty severe, a pandemic. I don't think that it makes any sense, the bear case for the small caps, that rate cuts would somehow send them into a tumble and they'd be bearish going, in the following year. There's just no data to support that. Like, it doesn't make any sense. And I don't know I don't really know where that argument came from. I hate the term fake news because it's maybe it's overused. But it does seem like one of those things that just sort of caught on as this is just accepted, and so everybody's just like parroting other people, and then you really go look at it and you're like, this isn't really true. So I don't know where that came from. So I feel like there's definitely a possibility that something crazy happens. You never know, the world over. There's definitely a possibility that tech bubble bursts and it just keeps going or whatever. Like, there's all kinds of crazy stuff that you could say would affect it. I guess my argument right now is not really an argument. It's more of just commentary on like how we were talking about it a little bit in the early part of the stream when there were like half of the amount of people on here. But like, the main concern last year was inflation, but that doesn't really seem to be as big of a concern right now. I really don't think people are thinking about inflation. The CPI, PPI data doesn't seem to affect much. What's been more affecting the market lately has been two things: earnings and the jobs market. Earnings being like the growth, the actual regular growth of the market. Like, are people beating their earnings expectations? Is the market still growing? That's just normal, like, growth market stuff. And then the jobs market right now has been the biggest concern, but there's nothing there that demands a recession. Like, people keep saying it does or it will, but that's not true either. There's definitely been some slips, but it's never been anything that can't be recovered or that's some kind of like, this is it kind of moment. It's more just fear. So the fear now has shifted away from inflation because, rightly so, because inflation has come back down to pretty manageable, regular increases. I mean, inflation's always going up, right? That's just how the world works. Money is worth less and less over time. It's always been there, And this whole saga was really a response to, frankly, to the government printing money and putting it into the market after COVID because people couldn't work. Which is weird if you think about it, because it's like, why did it even cause inflation if people weren't working? Like, they got, furloughed or whatever. It's not like they were getting other money from other sources plus the government. But I think a lot of that money, we just saw inflation boom after that pandemic. And I think a lot of it could be attributed perhaps to that time period. I don't know if there's any real reason to doubt that. But there was obviously a problem anyways with overspending in the government through every administration since the Bush era. I mean, there's really not been a single administration that's done much to reduce the debt. that our government has. They've all increased it. So we got a lot of issues with the government and printing money and stuff. I don't want to get into that too much. It gets very political very fast, but suffice to say, when we were like bloated at like 9% year over year, that's very different than like where we are now, like roughly 3%, and that's very different. So at the peak of it, it was like back in 2022 or whenever, March 2022, something like that. That was peak inflation and somewhere around there. And so those time periods are important because, and you look at the trends, it's like inflation's already been coming down, like in terms of year over year, because of these rate cuts. They did a good job, I think. And they may actually get their quote unquote soft landing that they wanted. And then the market's already been bullish. So it's strange because as inflation rates have come down, and when I say rates, I'm just talking about year over year type stuff, not like month over month. We know that that's fluctuated. And I said that too. Like I remember having little fluctuations and people were flipping out, and I'm like, I don't get it. It looks like it's topping off. Why would you think that that's a bad thing? And in retrospect, I was right, and I probably should have just been investing in like the S&P instead of looking at like every little move, just like the big picture. Hey, this is probably the bottom, and the market's reacting because people are scared, but ultimately it's still really bullish. So when I look at today, I think today is probably the most significant, like I've said it before, it's probably the most significant day that we've had really since the rates were risen. I mean, you're talking about cutting them. We've been talking about it for a while, but it's interesting how like it almost feels not that important. Like almost like, I don't know. I still feel like anything could happen, and I don't really feel like it's definitely going to run it. Because it's just like, well, maybe it's already priced in, and people seem way more concerned about jobs and earnings right now than they do about inflation in terms of like market sentiment. So the jobs reports and stuff may end up being a bigger catalyst. But you got to remember, man, the market is forward thinking. By the time that the good news comes around, the market's already run, and like that's kind of what we see with SPY. It's like we're finally at rate cuts. Well, guess what? We're basically still at all-time highs on SPY. It's like, well, you missed the boat. It's like the news is kind of behind, so wouldn't expect too much. I think that for IWM, just to conclude that, I genuinely don't know for a fact it's going to do this, but I think that there's a decent chance we could see it drop back down before it takes off. And I don't really put a lot of pressure on myself about that. I'm just kind of watching it. And we'll see. Level to level, I'm looking at 209, then 200. I mean, it's pretty straightforward. And beyond that, I think lowest we could go is like 195-ish or something. I've said that kind of stuff before, and then it's gone lower, but right around that area, it's about as low as I'd like to go. And it is a floor. It could definitely act as a spring for us. So that's that. So I think if the market does that, I think AMC could go as low as the 440s. Don't really want it below 430 or 435. And then GME between 1770 and 1830. I haven't really talked about MPW today. Didn't really feel like I needed to, but if you want me to say what I already was thinking, I'll tell you that I was already thinking 561 and 6. So we hit 6 today. That's where we're kind of checking right now, seeing if we can get back above 6. If we can't get back above 6, probably going to go down to 561, which is, again, what I said Monday. That's why I didn't get on yesterday, because like yesterday was just so super flat, and it felt like there really wasn't anything new to say. I didn't see anything yesterday that looked like it was going to re-break out. I mentioned on Monday that I thought it was probably going to come up and use this as a hook. It went to 655, which is a penny over the previous top at 654, and then it dropped from there. It doesn't have to go down this low, but that's just a natural place to go to, is like the 550s. And then I think it could potentially hold there. If it does slump, like with the market, for example, there's not really any reason to think we couldn't come back down and get like a gap fill even, which sounds crazy. But I think that the shorts are in a panic mode right now. And I think that there's a very strong likelihood they're going to try to drive the price down. If the market goes down, they're going to try to drive it down with it and see it sell off so they can cover at a like better price, right? And get out of positions. There was a heavy amount of short interest, 17 days to cover, which means from the time this started, they have till about September 30th, basically, which is quite a long time. You guys are like, what do you mean they have until then? Well, it's really like whoever gets out the door first. It just means that if everybody were to cover those positions, it would take like 17 days on average, which is a high number. So by that time, you potentially could have everybody out. I'm not saying everybody will get out. That's just one of those things. Yeah, I like my title too. Rate cuts feeling like sell the news to me personally. Yeah, that's what I'm saying. I think it's gonna. I have a weird feeling it might dump the market, but it's not a dump that's permanent, if that makes sense. I think it's a dump that really represents a final kind of flush before a bigger spring momentum move, especially for small caps. So I'm just trying my best to identify those levels. What's happening with WTO? Oh, Scott's asking. How do I put this? Well, so what's happening with it right now is that, and I've got a lot of funky lines on my chart, just kind of looking at different things. It is selling down again. It's at 50 cents already. Lots of selling down here. It's another selling climax. The first was back here right after that split, and now this looks like another one. So the bigger question is, after that split happened on September 10th, has there still been a fairly divergent RSI? And yes, so far, but it would need to bottom pretty soon. I mean, as far as I can tell, this doesn't look like it held right here, so it looks kind of weak. Like, it looks like there's still a lot of sellers involved right here, going up to like 59 cents or something. So I mentioned early in the stream, you guess you missed it, that the 60-cent mark was probably going to be the better key for like a breakout level at this point. So if you weren't investing in it, you may not want to invest in it till it breaks over 60 cents. That's it. How far could it keep going down? I mean, there's not really like a rule about this necessarily. It's just your interpretation of what you think for this kind of a move. Why am I talking about WTO? I'm talking about WTO because this is a potentially really good trade. Not everybody is going to want to trade it, but it's also a really good case study in understanding, how a potential like breakout would look. In some cases, it's going to be pretty much one-to-one. In other cases, it might be a little more difficult to kind of get the right answer. But I think for us, I had measured it out earlier, and I said, 136 felt like it was probably the level because you got this massive upthrust and dump here. And if that's the case, then roughly 53 to 52 cents should be the floor. But we're already at 50 cents. So you're like, well, then what's the point, right? Like, obviously that's not right, Booksy? Well, maybe. But a floor doesn't necessarily mean that's as low as you go. I mean, just because I had that drawn out that way doesn't mean that that's necessarily like the bottom. It could be that, yeah, 53 cents ended up being a floor, and it is a floor. It's a really tiny one. But we don't know what happens next necessarily, and I could look at this as micro as I could. What seems to be the case recently is that every time it's approached this high trend here, and I've got it kind of marked off with this blue line, it's been trying to dump down. So there's a compression happening. And then if it were to breach that, again, at this point, maybe it's not quite 460, or excuse me, maybe it's not 60 cents, maybe it's 53 cents or 55 cents. If we're to breach that and continue, my immediate expectation would be that it would reach the creek, which is quite steep, and it goes to about 72 cents. But there's also this parallel structure here, and I think that it sort of demands that it could come up even higher, maybe significantly higher. And I did a comparison with AILE because it had a really similar bottoming structure, and I think it's fairly straightforward. Like if it's going to advance here, there's a decent chance that it's going to hit these particular levels on the way out, and it's going to lead you back around $1. And to me, like that's already in and of itself like a really good move. And some people won't even look at this until they see it on their feed. And I'm glad it was brought up because some people won't look at it until they see it ran 100% in one morning, and everybody's like, "Oh, should we get in? Should we get in?" I'm like, I don't know. I get a lot of requests on this channel for like just generally kind of looking at stocks. And a lot of times people are requesting stuff that's already run. It's like they're wanting to know what happened, whether I should get in or not, and it's already run like 100% or plus. It's really hard to know because you're basically doing it after the fact. It's a reactionary trade. This is not a reactionary trade. This is a trade that looks contrary. It looks like it's dropping. It looks bad. And I'm saying that there's definitely some indication here that it's actually bottoming and that it could have a pretty massive auto reaction that goes at least back up to $1, and maybe I've got like 3 targets, $1, $1.30, and then like $2.50. If the move is immediate and pushes pretty fast, I've kind of got it off to the side here, but if it's immediate and pushes it pretty fast, my expectation would be that these levels are still the same, by the way, but my expectation would be that this is going to break the dollar pretty eminently. You know, I looked yesterday as best I could, and I mean, I could be wrong about the setup, you know, minorly, and it could be a little off. But as far as I could tell, this S-curve looks like it should be back up to the top like today, which seems a little bonkers. But that's what it looks like, you know. And again, doing the best I possibly can, and like where I think that major breakdown is as a 50% mark, I think it should be roughly today. If I'm a little off, or this is a higher S-curve, it could be Thursday maybe, you know, maybe Thursday or Friday. But it certainly looks like it should be like now. I mean, that's what it looks like. So that's not me rushing to the door to try to get people to buy something that I think is a high-risk play. It's still a high-risk play. Long term, there's a trend coming down right here that you can see, and we're basically right to it. That was one of those that I thought we might hit earlier. When we first came down, I thought we hit it already, right? Not right away, but like when we dropped here, I thought, well, maybe it's right, because you go to higher time frames, it looks like it's already kind of been met. But regardless, you know, it's a pretty straightforward play. It does look like a narrowing range as well. If you want to consider it that, I don't think it's the best measurement tool because of how narrow it is. But in theory, like if it's a narrowing range, if it breaks back above, as the crow flies, like 60, 70 cents, maybe right here. Hang on, let me see if I can grab that. It would have a target of around 250, which is already the target that I found. So like there's kind of a simple math to it, and it's a good setup. Yeah, so it was 17 days for Oh, it's 17 days for IWM. I said 17 for MPW. I don't know what you were talking about, but are you saying that it is 17 days? I don't know. You may be right. It was like 17 for MPW, which is a lot. So Jason Abrams brought this to our attention, this chart. I studied the chart. I did two different setup analysis on it. One basically is a pump that's followed by a drop. This is a little more similar to maybe what we might expect if the Fed meeting goes south, perhaps. You certainly could see this pump up and have like a smaller auto reaction down here, but not break out. And if that's the case, you might even get a reaction up to about $1 and then fail. It is totally possible that it doesn't advance here. And if that's the case, then you would drop back down. And basically by end of the week, you might even expect to be way back down bottom, which seems kind of crazy. Giant pump and dump. You're like, well, that's bad, but it's just a wave. Like that, the wave doesn't technically go beyond the channel. So when you look at a sine wave, you're looking at it in terms of that channel structure. And the hard thing about it is determining whether or not your timing is right and like where the middle is. Sometimes that can be a bit tricky. You might think that the middle is in one place and you're kind of slightly off, or it expands further, et cetera, et cetera, et cetera. So for me, I'm looking at it like the middle is basically right here. This is like the center cross structure right there, back on September 10th. So this gives you a directive on where that should go. And that reminds me, someone in our Discord had asked about, I need to go check. They had asked about sine wave stuff. So let me see if I can. This dumb thing updates like every day. Let me make sure I'm answering the right question. The right question here. It's probably simple enough. It's probably the same thing we always talk about, but I need to double check. So was on AMC. Any chance you could do a recap of the Creek strategy you use? I've seen bits and pieces and how the 50% works, but it hasn't fully clicked. Okay. Yeah. All right. Well, let me see if I can do it right now. So, a Creek is not. The 50% strategy. How do I describe that? Why do I think the 50% works pretty well? So some of it's just based on the simplicity of like a sine wave. Most sine waves, what they represent to us is like a series of supports and resistances. And so usually if the wavelength, and this is not always the case, but usually when there's a breakdown, how do I describe this? I want to make sure I do this right. So this is probably a really good study point, but if I don't describe it right, then you won't understand what I'm saying. Why do I think the 50% works? So the idea of like a 50-50 kind of move doesn't necessarily have to be the case ever, but it was an observation that I made a long time ago about first of all, it's not like some perfect formula that you can always do 50/50s and it always works. Okay. It was an observation that I made a while back about reductionist iterations. So when you have something like this and it builds out what we call like a creek, a lot of times that creek, and I'm going to make this creek over here white, a lot of times that creek is, and it almost always represents, again, kind of like an oppressive downward motion, right? So you're trying to like advance, but you can't advance because the creek is stopping you, right? So you get these moves kind of in the midst of these structures, right? And these moves may give you pretty straightforward, like, here's where the creek is type information. So usually what we see, not always, but usually what we see is the cat ear itself, which is the initial breakdown. So this is like the distribution on the top. The distribution, which is cat ears, can give you two pieces of information that are pretty important. So like number one, oftentimes, again, this is not like an all the time thing, but oftentimes the creek itself is pretty well defined within the cat ears. So the way I drew this, it doesn't look like it is, but I'll try to like make it actually work better. But usually it's either the first and the last, or it's like something to do with the final two. So it's either the first and skipping the third. It depends. If the third comes up higher, so like if the one in the middle, I'm sorry, if the second ear comes up, gosh, not even the second ear. The second push comes up higher, I may not use this method. Sometimes I'll use the first and the last, like this, and this often defines like a longer term creek. If it's super nice and it basically formed like a perfect wedge, you don't really have to ask that question. Other times I'll use these two tops here, which are like the last cat ears, the last known resistances. So that's like sold and then it's sold again. Every now and then you just have to kind of like look at the chart. You'll find that this doesn't really work perfectly. So what I think this represents is like a tangent on the wave. And so a tangent is a place, if you want to call it a perfect sine wave, tangent is a line that only hits the wave basically once. And way of thinking about it is kind of like that tangent represents, and we'll do this red so it matches. That tangent represents so the last trajectory of supply. So as supply is like turning down, right, they're going to be positioning themselves like this is the direction we're going to go. Does that make sense? And so this ends up turning into a lot of times like the main creek. It's not always the case, but it's usually pretty darn close. And then we'll get like secondary creeks, and this is kind of a secondary creek over here. And the secondary creek itself is usually like steeper. So it's like sort of the first, maybe you could call it like the first creek, or you could call it like the downtrend. This is the one that looks more like a trend to us. Is it typically, I'm making it kind of curved down. It doesn't have to do that. It doesn't have to be parabolic. But typically this is kind of like the first creek or trend. And this is the one that maybe causes the most confusion, because sometimes you think that the first trend is going to cause you to break out, but it doesn't usually. Usually, unless it's a V-shaped bottom, that breakout unless it's a V-shape, the breakout builds a new range. So the weird thing about maybe the strategy with the 50/50 is that you kind of assume it's going to go immediately, but it doesn't always. And that's where things get kind of dicey. So when you get to the bottom, I'm going to skip the middle for just a second because that's important too. When you get to the bottom of a wave, you're going to hit like a selling climax, you're going to do an auto reaction, If it's bullish, you might get like a phase B top, and then you go into like a spring, and then you leave. It's essentially like an inverted cat ear. If you look at it upside down, you'd see like a really similar structure to this, but upside down. Okay, typically. All right. So when this happens, on the bottom, this is where you get kind of again, people get kind of confused because they may think like an auto reaction is, and the breakout is what's going to turn the stock. And so unless it's a V-shaped bottom, that's not usually the case. It usually doesn't do that. And this is, again, why I'm often talking about this creek, because this creek may actually better define, and I could do it like this to make sure that it looks right, because visually that's what it would look like. I'm not just doing it to fit my chart, but it would look like that. Is that typically this is going to kind of match where your SOS is later, like here. Okay. And so what we end up with is we end up with an accumulation down bottom. It also is kind of like cat ears, but they're inverted. They could have a spring, they could not have a spring. So this is basic Wyckoff. Unless it's a V-shaped bottom where you might have that breakout, right? This creek is typically not broken, again, and just taken off. Usually there's more to it than that. Usually you form out a range, okay? So we have a tangent on the wave going down, and this is what has defined this movement thus far. Like, it's downward, right? You also have tangents upward. And you might be saying, like, where does this get to, this whole idea of like creeks and stuff? Well, interestingly, there's a lot of commonality in iteration. So things that we talk about here on this level would work as well, like for example, within this range, and they would work as well, for example, within this range. So there's a complication to it because you have to sort of know what you need to look at. This is where things get dicey sometimes. Because it's like, well, what am I supposed to look at, Booksy? Well, a lot like what we talk about on the other side, if we're talking about a, kind of like an inverted cat ear structure, this looks like a distribution upside down because I have a spring. If I didn't have a spring, it would probably look a lot more like the first one when I flip this chart, right? But there's typically going to be like another series of creeks that are met to the downside, and these will help determine, and these are, again, things that are jumped early on perhaps in the structure. And so I use some of these as like, I don't have enough detail here to really show them all, because the way this looks doesn't look quite right. It should be like this. But a lot of times this one actually is pointing towards the next top. So this is where things can be maybe a little bit confusing at times, because you're like, well, I don't know which one to pick, so I don't know what you're doing. You're going to see how the 50-50 plays into this pretty quickly. I'm purposely doing it like flat, because if I did it at an angle, it might be a little bit confusing. Because basically what this represents on a flat scale is this represents a channel, like up, down, up, down. But we all know that like that's not really how channels are usually. They're usually much more like horizontal or like diagonal, right? They go down at an angle or up at an angle. So a lot of times what we find is that this marker here, and this is like between the cat ears, often represents like how high you go, okay, on this particular move. And then here's where the 50-50 comes into play. So upon observation of stuff like this, what I noted was that if you look at the middle points on a lot of these moves, they look like kind of micro cat ears, right? And they're never like perfect. They're always kind of like janky looking in the middle. You might have multiple ones of different sizes because it's, again, typically there's going to be some kind of like a shrinking that's going on. As you go down, it's going to start looking more and more like, oh, I'm seeing kind of a similar thing where it's distributing. These are your LSPYs going down. And these particular LSPY motions, last points of supply, until you get to preliminary, supports and preliminary supplies, depending on which direction you're going. These tend to be very like iterative. Like they look a lot like the top, so they're going to look like they're shrinking. So when I see these, I usually think, oh, possible iteration, and then I'm also thinking LSPY and maybe preliminary supports, right? Preliminary supports, why? Because the buyers are trying to stop the advance of the sellers. LSPY, meaning last point of supply, maybe if it's up high. Preliminary support if it's maybe down here, for example. You probably find one like right here as well. And then your auto reaction is usually going back to that preliminary support. And that's how you know it's an auto reaction. It's going back to that support and checking it. That's how the range gets built. That's why when I look at stuff like this, I can't help but think that this is probably like a preliminary support up here. And there's no reason why if we have an auto reaction, it shouldn't go back up to 136 because we haven't checked that yet as like a major line for resistance. So like same deal with this, this early kind of hook motion right here up at 330. So and then we really ended up, most of that is 1, 2, 3 right here at 220. So like the fact that there's a triangulation on this particular example that I'm looking at, right, where there's clearly been like support M cross right here where it's dropping through a bunch of creeks, and then resistance, that support and resistance are matching up to meet this level at a particular place in time. Doesn't mean you're going to get there at that time, and that has more to do with sine wave theory, but it absolutely means that that's very important because the bulls are trying in some ways to get back there. They're gravitating towards that top. Bears are gravitating another way, right, when they're using different tangents and waves and stuff. That's why we're using these particular lines as structural lines. That's why I keep them on the chart, because I think they matter. All right. So a lot of times what we find is that there's we can call it a cat ear if you want, on the bottom that points to the top. And we can see there's a cat ear on the top that points to the bottom. And it usually has to do with the kind of the beginning and the ends of the range. Sometimes we also find that during the distribution, there's another one, like a bottom support, because again, support, support, support. Where are the bulls trying to go? Right? So the bulls are trying to go this way. I'll make this different color so you guys aren't like completely like lost. Bulls are trying to go up, bears are trying to go down. It's pretty straightforward. Really? Thought I was going to learn something on here, Booksy. This ain't controversial. No, it's not. But it's a way of understanding like the reason this works, right, is because they're lining up and they're driving the price a certain direction, but then they lose that trend. Naturally, when you return, if you break out on the bottom, and that's the if question, then you should come back to that trend. And it usually meets up pretty regularly with some other level. Now, when you're looking at it, this exact same principle I'm showing right here on the downward motion, that wave comes back up, right, to where that cross is, but this is positioned down. So the expectation is a lot lower, at least on the shallow wave. And we're starting to look at it more like this, right? Like, oh, we're looking at just the downtrend, not the big breakout. So there's two motions here. You starting to see how this build out is starting to look a lot like what we're talking about right here. That's because, again, like if, for example, this had come down into this motion, and I kind of have to make this work. If this had come down into this motion, you would be looking at this and also saying, well, isn't there like a 50% right here as well? And there is. And that's the crazy thing about all this, is that there's another wave, right? We know there's a little wave here, and then there's a bigger wave potential. Starting to see it. Hopefully you're starting to see it. This is everything that I do. You don't even need me anymore if you learn this, because you'd be like, oh, I'm just doing what Booksy does. I don't need to listen to this guy anymore. Now I can form my own opinions about things if I agree that this methodology works, and it does, I think. Otherwise I wouldn't use it. So then when I look at this, I'm like, okay, So we've got like tangents on the waves. We've got basically, the structures that build up a top and a bottom and then the middle of the wave. And then this is where things get kind of interesting, is that when you look at the grand scheme of things, if we're doing like a sine wave analysis, and this is what you'll probably remember, is that suddenly everything kind of starts clicking when you start looking backwards at other particular examples, like other particular spots. Because this particular motion right here, I have it going down, but it could have been going up. This should represent like a 50-50 cross. And so this is where things get kind of interesting, because you start to realize that there's a continuity to sine waves, and this is the 50-50 cross kind of idea, is that crossing here and crossing here often give you like the same, like they give you like a projection. And that also makes sense because you're coming over the top, you're generating direction, in each of these turns. And this is why we hit like multiple waves. As you're moving around the top of a wave or the bottom of the wave, you'll see multiple trajectories appear. A lot of times this is where you can use stuff like the fib fan, because you get to like this point and you're like, well, maybe I don't want to use all that stuff. Why does the pitch fan even work? Well, because there's like multiple projections made at these tops and bottoms. It's that simple. And so these end up matching a lot of these same trajectories, and you get these fan motions, okay? So the 50% works pretty darn well usually. And then there's usually a series of, and I kind of made this one like I fudged it, so I need to kind of put it back. So as you continue forward with this, what's the next thing? Well, the last thing here is here, I'm going to use a sine wave. This is the 50% rule. So if you come through 50% here, this creek, when it breaks, if it returns back, should come back down to that line. So it's usually a 50-50 cross. That means from the peak to the bottom. All right. Now the way I have this drawn, obviously I'm drawing it a little differently, so on and so forth. What this could mean, though, potentially, in this particular setup that I've got right now, just as an example, is that when you look at this, you might think, well, doesn't it have to go up then? Well, no, because technically, like the 50% here, probably in this case is like the SOS, right? Or near the SOS. It could easily just distribute and come back down here, and it would make sense to us. It'd be like, sure, right there. So there's the top, here's the 50% of this wave coming through, and then it just so happens this just meets pretty well with this, and that's, again, fairly typical. Like it would intersect multiple marks at the same time. It just depends. If it stayed up a lot longer, you might again think, oh, it's never going to come back down. But then if it breaks down, unfortunately, you're going to be coming way back down because there's nothing else there if it hasn't been checked. This has happened on AMC a number of times. We've had massive distributions. And especially when it goes sideways for a really long time, after peaking, for example, sometimes that could represent a really nasty sell down, because by the time you get down there, you're like potentially below like the recent bottom. And that's happened before in like macro distribution elements. Okay. Now the slingshot stuff, which is my projections upward, where does that come from? Well, I found that over time, it really isn't, it's not that complicated, but basically like each of these breakdowns typically represents, it's easier to do that on like that March 2022 example on AMC is just an easier one to do. But usually what that is that if you look at the distance between like a spring, for example, in the SOS, that 50% is going to be like right in the middle of the range, which makes sense. But then if you look at like from the spring to the top, a lot of times it's going to represent not necessarily a peak that you're going to hit, but it represents like a swing value that typically leads you back to the middle. Now I've kind of got it drawn a little off here, but it's often representative of like the halfway point on this wave. And it is, in this case, if I did this right. And that's just the nature of the measurement. Do I think that that's because there's some kind of a fixed way to do it? I don't know. This is a very chicken and the egg type deal argument, which doesn't even really need a whole lot to, there's not much to it. It's kind of like if I'm building out a range, what mathematically makes the most sense might be a reductionist attempt to like drive this into halves, like half, half, and then come back up half, half. I think that's just the way it works. I think that's why GAN structures work really well. GAN does that, it splits it in half and splits it in half again. So it goes 50, 25, right? I mean, it's just quarter system. It's not complicated. I think it's just mathematics, and I think it's just easier. And then we do see sometimes with fibs that it does stuff like that, where it's like a fib reduction. Maybe when it's shrinking, it's doing a fib reduction, but like, I think it's just because it works. Like if the goal is to get you back to the midpoint on this breakdown, so if we have this massive move from top here all the way down to bottom, well, we know that the middle is right there. So they're going to do everything they can to get the adequate liquidity that they need to get back to the middle. If the goal is eventually to get back to the top, the middle is going to end up being really important. We use 50% all the time when we talk about golden ratio and retracements and stuff. It's just one of the more common retracements. And I think the idea of like a spring going to a particular low where it just so happens to reach that 50%, I don't think that's accidental. I think it's just mathematical. Like the goal is to get there. They're doing whatever they need to do to get there. And so it's interesting because this does tend to work. Like you tend to see this as if I can measure from the top to liquidity middle, I usually can identify maybe where that spring value is and then potentially like go from there. And it gives you a series of 50, 50, 50s all the way up. So when I'm projecting this forward, it may then be wise to look at, okay, well, let's say I go from the spring and I drive up to an SOS, and the SOS is like a 50-50 move. Now I've got another 50-50. If that 50-50, for example, on this first marker, that one matches like this level, then I'm pretty much, in my brain, I'm like, yeah, that's very likely. That's just a probability thing. Like if it just so happens that that measurement perfectly matches like a 50-50 between where an SOS should be and then the next support, then I think it's mathematically higher probability that that's what's going on. It's observational. It's not me trying to necessarily predict the bottom, more just observation that like, yes, that's a likely one of maybe of many, because sometimes there's more than one potential bottom. And then you look at that and you say, sure, that makes perfect sense, because then it would be a 50% retracement on the whole move. And it's based on, again, like maybe this early setup. And then it's also based on just sine waves, because we know that, like what I just said, if it's true that the bottoms can often in the cross then indicate the top, you should be able to do that on the micro examples as well down here, and they should help you to identify where the bottoms are. So it builds on itself. Like as you go down in iteration, it may seem like, oh, this is too small, I'm never going to get it. But if you can get it down here and it gives you a number, then you can go back and check, see if that number works on the big picture. And it doesn't mean it has to happen. You could be wrong about it being the bottom. That's possible, right? That happens. But it does mean that it's higher probability in my point of view. So I look at something like this, and then I look at what we're talking about right now. Like we're talking about, for example, WTO. And you're like, well, you know, at first you said this was the top, and then that could be a potential bottom. Well, yeah, I still think that's possible, that 53 cents is a bottom. Well, we went lower than that. Yes, we did. So at this point, it's like, well, how low can you go? And then where is the bottom? Well, if it goes lower, you can see there's another couple hooks right here. There's more than one possibility, right? And then you also have the possibility that if you're using these particular ones, and you guys are like, well, which do I use? You know, it's like this is different as well, because going from 230 down to the bottom as it is right now, you definitely can see how that's starting to look like more like a dollar, and it looks a lot closer to that waveform middle. Okay. So starting to see like a connection between these 2 points as like the more critical points. Like if I'm going to pick a middle, it's probably going to be one of these two right here. And then I can go from there. So then I can start building out waves. Now, when I go back up, it's important to note like, well, what happens if I 50-50 around this other wave, which apparently has a middle at 75 cents? Again, this is about probability. Like, is this a likely bottom? So let's say, for example, like I think this is going to be a bottom at like 50 cents or even slightly below there. If I 50-50 around the middle at 74 cents, does it give me one of those middles? Yeah, it does. It gives me a middle at $1.12. So now I've got a potential middle there, and then use that as a center for 50-50 increases, and they've got to move out to the top again. So structurally, does this give me retracements that make sense from a sine wave perspective? If we know that each of these little waves is going to build out sort of in a similar manner where it's going to do like a 50-50 drive over a creek, does it make sense? Yeah, potentially. So does this give me a 50-50 drive over a creek? Yeah, there's this guy right here coming down. So if I hit a low and then I do a 50-50 drive over the creek, even like right this very second, it would take me from 50 cents or whatever up to 74 cents, which breaks that creek. And then it takes me up to $1.14. Do I have a bigger waveform that's kind of pointing to that place? Yeah, I do. I've got this wave right here. This is incomplete. All it's done is pushed up and then pushed back down. And if you don't like the way I drew it, you can draw it more like this and very mechanically kind of see like, okay, you know, I don't know exactly where it's going, but it definitely looks like it's going that direction. And then you would expect there to be a push up, right? So it's sort of like you're watching to see where those incomplete waves are, using that cross from peak to middle or whatever, from bottom through the middle or top through the middle, depending on direction. And you're going to look at where that projection is. And in this case, that's where it is. It's at $1.12. So now I'm starting to like build a case that, yeah, this is starting to look right. You've got potentially a top here. You've got the middle structure. You definitely have the potential that this could be a lot wider, and I drew that out the other day, just saying like, yeah, it could just be an auto reaction and a phase B, and then you still have another bottom, because technically that could just be like the first creek, like we said. There's actually a much wider one. And this is kind of interesting, this example that I use, because it's really similar, because in this example, that wider creek, which would be like this blue area, for example, could represent, in this case, like a number of things. I mean, it could represent like a phase B top. It could represent like a bigger breakout. Sometimes, you know, that early creek, and then we'll talk about the red line, that cat ear creek ends up being like a parallel as well. You know, like here, maybe it's a higher parallel or something. And that's pretty normal. I think people see whatever they want to see in terms of what's the most important. Some people are going to see this as like a beak, like a falling wedge. They're going to read that. Other people are going to see this as a channel, and they're going to read that. And other people are going to see it as a much wider channel, and they're going to read that. It's totally normal. So I'm kind of doing all of the above right here. I see it as all three, as a possibility, you know. And I note these things whenever I have like two bottoms, for example, and I'm like, well, there's two bottoms here that are pretty clearly bottoms. If I can take that marker and move it up, then I can use that as, you know, potential for creek, intersection. And I think they are used. I think it's just self-fulfilling prophecy kind of stuff. So right now, like, this is a number of things, but I think it's an iterative move down. It's doing this motion right here. And if it's a V-shaped bottom, it just breaks right back up to the top, and it's a macro push, kind of like this. Just pushes right back up. If it's a little bit wider, you still have a lot of space here to form out a range, and that's not something I can really determine until it happens. So that's why I'm giving you guys like certain levels. I think, well, here's one that's pretty key to both situations. And then if it breaks sideways here, you can see that creek maintains, and then it has to pass over this one again later. That's like us forming like a range. So which is it? Is it form a range or is it just breakout? It's kind of both, because even if it pushed up and then just broke out, there still have to be some kind of a range formation here. So the key of all of this is not to say like that this 50-50 has to follow through. It's definitely there, you know, reductionistly, it's definitely there. But I think it's more about what happens here would then determine the rest. So do I need to have every single price target in the universe to understand that it's pretty likely this is going to come up to $1 to $1.11? No, I don't need to know, really. That's the main, that's what I was saying. Like, that's kind of like the main trade. The main trade is like right here. And then if it sells off, so be it. It comes back down and it forms a larger picture, bigger wave here. And this is just an auto reaction. But if it doesn't, then it's kind of like what we saw with AILE, where it just has a strong reaction all the way back up and just sort of ignores the need to kind of explore liquidity. And that was the AILE example that I gave kind of first thing in the stream, because this one did not form a lower range, at least not on the micro. Now, on the macro, which is kind of where we're at now, does this maybe indicate that it's going to form a bigger range? Sure. I could still drop down again and form a larger range. But on like the small picture, it didn't. Down here, it just popped, came back up. So I use creeks as a way of understanding, okay, there's certain trajectories that are being built here and here. And that's kind of it. I mean, those are sort of like the projections. And so are both of these met? Well, yeah. I mean, kind of. They both are ultimately met. It's actually pretty straightforward. The challenge is then identifying things like the 50% line, like where's the middle of it, and then other things come along with that, like doing these things is kind of different, but the breakdown value equaling the breakout. But I think that has to do with, again, probably another 50-50 reduction here to here, you know, and how this has dropped halfway and then dropped another 50%. And the reaction ends up being like a 50% to 60% retrace, right? And then also the fact that there's channel lines. And so if you have a channel here to here, it may eventually equal a channel like here to here as well. So it's a bigger wave working out. This is small wave stuff, and this is like down and back up again within a channel. All of that stuff can be aided by the 50% stuff. Using it forward for forward thinking is a little bit more, I guess, more of an intuition of where those should be. It takes a little practice, but it does work. And like, for example, like right now, does it make sense to me? Sure. Is it a little later than expected? Yeah, of course it is, you know. But if it broke from 50 cents and it 50-50'd around the current, frankly, the current like major resistance, which is 75, it gets you back up to 111, and that's precisely where we want to go. That's like the next level. So I don't think that's typically coincidence. You might say, well, what could just keep doing that, couldn't it? Yeah. And I did that on AMC a while back. I don't know if you guys remember. We talked before it hit like 440. I think we were talking about if it kept iterating the same way, you could see it come down to like 472. And that seemed to be another really critical bottom at the time. And it was like me doing 50% reductions is what I was basically doing, and saying like, how would you get from here to there in an iterative fashion? If you break down 30% every time, you can do that. It takes a little bit of practice, but it's not impossible. Sometimes I nail it on the head and sometimes I don't. But it is what it is. Some of you are like, I don't get it. I still don't get it. Well, if you did 50% every time, wouldn't you just like have the same floor every time? Not really, because like this is another thing. It's like hard to describe this, but back in that March 2022 example, I used all that same ideas. That's why I started using that waveform stuff. I didn't call it sine wave stuff at the time. I was looking at these big arcs, and I was like, it's weird how they're kind of projecting targets, future targets. And then I started looking at retracement values and stuff, and I was like, yeah, it seems like they're kind of projecting these retracement values. And unfortunately, my understanding was way too fractal based, so it was kind of muddied by thinking that I had to do some kind of sequencing to understand that. And really, all you have to do is understand the way a wave forms, and then like what these like indicate, these potential interesting points, what they indicate in terms of direction, and then how to kind of triangulate that direction. All that stuff is really all you need to know. You don't need to know anything else. Like, so the master fractal that I use is just a sine wave. It's just this, and then the like last part of the wave, and then goes up. And so I just started using that as like, oh, this is just a sine wave that's broken into like micro sine waves, and so on and so forth. But back then I was trying to do something different, and I ended up coming up with a weird idea that actually did play out. And it was a concept that still to this day kind of haunts me, because we even found out later that they measured it, and we did this year, where we found out that those S-curves that are broken actually measure out and add up and give you the values. It's like it's written in the distance traveled, which is amazing. That there's a mathematical distance traveled. And at that time, I didn't really think too much of it. I was just thinking about this as like a big wave. And I remember drawing it really weird. Like really weird, guys. Like I drew it like this. Or something. Like that. And you're like, that doesn't make any sense, Booksy. And I'm like, yeah, I know. But for some reason, like it made sense at the time, because I was doing things in like an iterative fashion, where I was looking at that, and then like, I mean, it's so super confusing. Like this, like I don't even know. And then like another one right down here. It was really bizarre. But this is actually what I was doing. I was trying to like see those iterations expanding. And I came up with what I called the mother of all charts, which was wrong. It was kind of right from like a theoretical wave point perspective, that wave would continue to expand. It did. Expanded over here, but it never broke out. And the issue with that, again, was like thinking there was some kind of a fractal perfection to it. Like it was going to continue to go proportionally the same way every time. And it doesn't have to do that if it breaks certain things in a bad way. Anyways, one of the things I noted, though, that I thought was pretty peculiar, so here's like that 50-50 and then the 50-50 here for the SOS and the spring. So they end up working around kind of the middle of the range, which is fascinating. You basically get the same spring, basically, distance down as you get up. So it's that flush and then that flush. But one of the things that I thought was peculiar about this setup, and I noted it in a video a long time ago that I called like a slingshot, and at the time, I guess I wouldn't necessarily have understood what I was doing. I probably to this day, like, I mean, I have to go back and look, because I think that what would have been a better way to do this target would have been to do this between the ears, because this represents support, resistance, and then where you go back to resistance. Super simple, right? Like it's a wave, up, down, up. It's really basic. But that's probably what I could have done. And then also I would bet that if I went back here and did a 50-50, it probably would be this area. And represents like another area that's intersected on that projection. That's just me understanding waves better. But anyways, I did note that there was some interesting stuff that happened. So from the pullback level, which is hard to see here, up to this top, I noted that they really like the 50% on AMC. They use these levels. So there's an anchor right here on this cat ear. So these are iterative, 1, 2, 3, and then there's another one, 4, coming down. And every one of these is used as like a really important point on this build out. And so that makes sense because you might just look at it with common sense and say, well, those are just support and resistance levels, Booksy. Well, yeah, I know. But at the time, I guess I was looking at it and just determining mathematically what did it do. So one of the things that was interesting was this pullback level here, when the final hit happened, was like a 50-50 around this middle guy. Again, waveform projections like going upward. Another interesting thing was that if you looked at the move past the SOS, this is basically like a perfect 50-50 past the SOS to the top. Why does it go exactly, almost exactly 50% beyond the SOS from like the bottom? Good question, right? And I think a lot of it has to do with this, because these are waves that you're generating and you're creating like anchors. So when I do triangulations, like where I'm looking at something and I say, hey, there seems like there's a possibility or even a high probability that you might get a particular intersection. The reason I'm saying that isn't because like I just want something to happen really bad, you know, or whatever. A lot of times it's because stuff like this, where I'm like, oh, this wave is triangulating to a top, and it often is very solid, like it's pretty much like a perfect wave wraparound. And I'm like, yeah, it looks really good. This could be a really strong potential top. This also gives you timing. Does it work every time? No. I wish it did. I wish it worked perfectly every single time. But it does work a lot. You know, it really does. And when you look back at like bigger picture stuff like this, you know, might look back at this and say, well, it doesn't work enough, perhaps. But that's not really true. It actually works quite a bit. Like there's a lot of this that goes on in an iterative fashion in the market. And you can see like the same things are applying here on the micro as they're applying on the macro. And if you can identify those waves, then you should be able to identify to some degree, you know, the 50-50 on those. So you can see that this is not perfect necessarily. It was really darn close, right, to being a halfway point on this wave down. Just having that knowledge is not enough. You have to like apply it. Obviously, you have to apply it like in a forward-thinking way. That's why we look at S-curves and we talk about like what is the 50% of the S-curve, where would that lead you, things like that. And then you look at projections like, all right, well, the wave only came down this low, so is it projecting higher? And if it is going to go higher, where does it have to go above? It's always going to be this line, this 50% line, always. Always, always, always. And that's why, again, you go back to looking at something like a macro chart, for example, on something like AMC. And that's why I look at stuff like this and I sit here and confidently suggest to you that this is a macro wave here and that it's going to come back up much like this did. You guys are like, what? And come back up to this point at a later time. Is that not pretty much the exact same thing? Yes, it is. So it's never going to go higher if it can't break this. And then where does it hit this? February 2026 is what I've been arguing. So what happens between now and then? Stuff. You can do a number of things, but one thing that you would definitely need to see happen is you need to see like a macro creek cross at some point. It's probably going to be represented by like a halfway point over here. So when I look at this big picture, it's like this is all the same. It's no different in theory. So what would I need to see? You know, like probably some kind of a double M shape, and then a pullback, and then some kind of a double M shape, and then a pullback, and then some kind of a massive rally. I mean, this is usually what we see, wave, wave. because you're crossing a gigantic creek. You can't just go from A to B. That doesn't work. You have to go through the process of driving through the price. And then that's why, again, like when I look at this individually, I'm like, well, maybe it comes up higher, but it doesn't really look like it needs to. Kind of looks like we could get up to, you know, the top without much hoopla. We don't need to go higher than like $15 right now. So then I look at it and I'm like, okay, what am I looking at? Is this just a massive double M top? There should be a double M here. There should be a double M here. There should be a double M here. You guys are like, well, this is getting kind of crazy, isn't it? Yeah, but you get the idea. All that stuff represents waves upon waves of movement. So that's the nutshell for like the sine wave stuff that I do. And I think it's pretty straightforward. It may seem a little bit like complex at times, but it's not really that complex. Now, can I determine like every single one of these levels way in advance? No, you know, but I think there's a natural progression here that makes sense. I mean, if you think about this in terms of just supports and resistances, it's pretty natural, like, way to understand the market. Why does that work so well, Booksy? Were you just like doodling something? No. It works well because it's built into the structure of it to work well. Like, it's not going to happen any other way, in my opinion, than to work within the existing places that already have supports and resistances. So this is like an early push of that resistance. It's a check of this creek. This is why I've been stressing the current run up is not going to 20, even though a lot of people think it's going to go to 20, because I don't think there's any reason to go to 20 right now. Like, I think you could stop at like 15 and you'd be fine. And if it takes even longer, you could be stopping at like 14. You just have to push this top resistance and then maybe this creek like a little bit. There's no real need to go way beyond it. Now, the rest of this, you might say, well, why do you think then it could go down really low? It's because it looks like this looks really good where you're staying up high at 6. Why would you ever go back down again? That's a good question. The problem is we really don't have the ability to know anything beyond the iterations that we have. So like the current iteration is that this breakdown comes low. So this has happened here where it kind of creates that double top and then it comes down really low and pushes down for a spring. And this is kind of a situation where the M jumps up and then forms an LPS. But there's a very real reality here that is that, again, this is still in and of itself like a bottom. So you can treat it however you want to treat it. You can say like, well, I think it's going to do this. It's never going to come down again. Okay, but there's nothing that says like if you pass above 11 something, there's no reason to think that if this hits this top that it can't come all the way back down. It sounds ridiculous, but it totally could. You know, and this is what happened in 2020, and then you get that cross up and it's like this massive push, right? And you're like, well, where is the M cross here? It's there. It's there, guys. It's right here. It's just super ugly looking. Like, this is it though. You know, like this is basically your M cross right here. That's it. It jumped the creek right here. So you're like always thinking that like it has to look a certain way or it's going to be this or that. But it doesn't. Like sometimes it's like this where it's like that this bottom ends up being more of like a regular bottom. You don't really see much of the M cross. It just looks like a jump over 50%. That very much could be what happens in this setup. You could have another move that's a lot like January, and then you could have this kind of slow, boring pullback. Both of these accomplish the exact same things. That's like the crazy thing. It's like it's not like one or the other is somehow superior. And what's weird is that when you look at the waves that happen back here, they drove down low and they don't ever make like new lows. It just kind of builds its way up, but it's super slow. So this is another example of one that's just kind of spits in the face of maybe the pumpers that want to say that every move is going to be like the MOAS move, because it's like, if you think that it's not possible, I would have a lot of questions for you about what the heck has happened in this stock over the last several years, because we definitely had some pretty massive waveform pump and dump type stuff in that bottom before August. That was a distributive top, but the point is like it did accomplish the same goals. It still came back up in a massive wave. August 2022, that's before APE was introduced. And we had huge moves here back in this region. It was like 50% plus jumps. I remember each of these was like pretty significant. It's like 40, 30, 50, 20, 20, 20, 20, 30, 40, and then like 100. And it all added up to like 200%. This is like another example of one that, yeah, it has these like massive moves. They're there. They're creating like the little M-tops and stuff. They're jumping the creeks. But then when they build out, it's like super slow. And it stays low for a lot longer, going into the M's. You still get the same like waves. It's just low, low, low. It takes forever to break above, the middle, which again happens to be the same middle that we like kind of dropped off the cliff from. And arguably you could talk about this as like the more important jump because of what happened here. I don't know, it just started. There's not really any real reason for it. So I can't do a full recap rally, but I just did this for Juan Rowe because he asked me about the waves and he asked about creeks. Creeks are not necessarily always going to jump 50-50, but they have tendencies to obey certain kind of principles on larger waves. And I do think that oftentimes that looks like a macro to micro comparison of like 50-50 jumps. It's not perfect. Okay. So right now, making a case just for AMC as an example of a couple different situations where we had those 50-50 leaps and what that might have looked like. In terms of like where are we going today, I think that it's probably like I've been kind of leaning towards selling the news kind of thing. I think that the rate cuts might incite like a final drop for most of the market. I don't think it's necessarily going to look super bullish right away. If AMC were to hold here right where it's at, maybe, it could go right up. But to me, it's been looking a lot like what I kind of expected early on, which was really just this blue line, which is it topped off here and then it started slumping down. Volume's been pretty high. It's been on a rise and we're not dropping like a rock. So it's holding up very well, but it's hard to say. If IWM drops down to like 200 or something on a big sell-off, I think AMC could go down to at least 461 and then perhaps down to even 440. And then GME, same deal. I think it's very possible we could get a pump that breaks above like the creek first. That looks like it might happen. It kind of looks like this reminds me of a triangle structure. It looks like a falling triangle. See how the bottoms are like 1, 2, 3, 4 right there at basically 1980, and then the price is coming down. That can be bullish. It can be a bullish pattern, but I don't know if that reaction actually elicits a major push up or if it's just like a pump before a final drop. So I think this week is just going to have high volatility. I don't really think too much of any of the moves this week. I don't expect there to be much of an answer this week. I think that by the end of the week, we'll kind of have the setup finished, and then that's my expectation, and then we'll see a bigger move next week. I honestly think if we're going to get ramped and go. We're probably going to drop first, get a spring or whatever, and then just rock it Monday or going into next week. Or maybe it's the Glenn Miller thing and we end up leaving in October, you know? Yeah. Yeah, I mean, short term is really simple. We had 496, then we had 484, now we've got 474. After 474, you have 461. It's not, I mean, to me, it's been looking more and more like it's going to do the dive and try to get low. It doesn't have to, and if it ends up building a higher low, that could be really, really strong. I mean, that could be like an LPS right here at 474. It's sort of like these mix of these two together. But if it does go for a spring, it really could go pretty low here. Yeah, it's possible even 440. I'm thinking this is a better spring zone though. I've kind of had this on the chart for a while. All right. Well, I don't know what's going on today with folks. I'm not sure where everybody's at, and I don't know if it's my stream being crappy or whatever, but it looks like viewership is like all-time low right now, which is kind of interesting. On rate cut day. I'm gonna take a break and I'm gonna come back for the Powell thing. So I'm gonna take a break until 1 p.m. Central Time. I'll be back on then. I'll try to get on before then. There's gonna be the news and then the vocal announcement. So we'll probably want to be on before then. So I'm gonna try to take an early lunch today. I've been working on an animation project of fish swimming, which is not exactly the most fun thing, but it's been pretty fun, kind of challenging. I think I've almost got it down. I did that like all day yesterday, so I'm going to work on that again today over my lunch. And yeah, take a break, stretch, eat lunch, work on that. And then I'll be back for Powell, and we'll do the normal Powell thing. Hopefully my internet holds up through all that, but no promises. Worst case scenario, I just won't stream Powell. I'll just talk. We'll just watch the market. You guys can watch Powell on your own. So weird though, isn't it? Weird day. I would have expected today to be like a big day for the stream, but it's just not. It's really strange. Like, I think that's really bizarre to me. I don't know. Even if people don't necessarily agree with what I'm saying, you would expect there to be like a lot more people today. So, not sure. Yeah, final thoughts. Pretty much concluded everything I wanted to conclude. WTO is a high speculative play, okay? It's basically a penny stock. It's very risk on. I think there's a strong possibility of a particular kind of move. I use it as an example to help talk about this stuff. And this is something I'm going to share. Maybe I'll do a video clip and put it in the Learning with Booksy section or something. I haven't added a video there in like a year. But I did it because somebody asked me to kind of re-explain the idea of creeks and those 50-50 moves, and I think this is a pretty decent explanation of that. I may not have gotten through everything I needed to on it, but it's all right. I think it's one of those things that you could teach it, but at the end of the day, like, you have to sort of do it and practice it in order to really get it. It's not like you could just show me and then never and just fully understand it. You kind of have to just work through it. It gets easier. I wish I could make a rule book tell you exactly how to do it, but I can't. So anyways. All right. You guys have a good lunch. I'll be back in a couple hours. Talk to you later.